Okay, Robert?
Good morning. This morning we're gonna have a pension committee meeting. I'd like to call that to order, and at this time I'd like to turn the meeting over to Tim Sindel from the Valesco Advisors.
Thank you, Bob. Good morning, everyone. I can still say Happy New Year since it's the first time I've seen you in 2024. I hope the year's off to a good start, and it's wonderful to be here to give you an update on the pension plans. I'll provide a few overarching comments before we actually run through the allocations and performance, but I'd be remiss to say that 2023 was a bit of a blockbuster year for the stock market and the bond market as well, and the consensus did not predict that at all. So at the beginning of 2023, lots of negative feelings about what was going to happen in 2023. A recession, a difficult stock market, and that's the way we entered the year. There certainly were a lot of conflicting factors that made things look like it could be bad. We did have the Federal Reserve still on an interest rate campaign that was pushing interest rates to the highest level since the 1980s. That caused a regional banking crisis early in 2023. Several banks failed. That certainly was not a positive thing to happen for the stock market. And then we had the continuing war in Ukraine, the overarching fears about geopolitics, and the war that broke out in the Middle East. All those are lots of negative things. But in the face of those challenges, the S&P 500 was up about 26% last year, and it was a classic case of what we call upside risk. And that's when the market avoids the most worst, that's a bad way to phrase that, the worst potential outcomes. And by avoiding those worst potential outcomes, you have a surge in security prices. That's in effect what happened last year. We had, especially in the fourth quarter, an 8 to 9 week, really very powerful rally. That pushed the aggregate pension plan performance up about 10% in the quarter to a gain of about 15% in all of 2023. Bonds also had a very, very good year. What really sparked that rally in the fourth quarter was the belief that we were going to get a soft landing, that finally inflation had come down enough that there wasn't going to be a recession, that the Fed's interest rate cuts hadn't slowed the economy enough to force the economy into a recession, and that inflation was going to come down, and that's kind of what you think of a plane having a soft landing onto the runway. And that certainly was then confirmed by comments of the Federal Reserve in the fourth quarter, where they said they were actually forecasting 3 rate cuts this year. Now, we have a little bit of markets differing from what the Fed is saying. The market's expecting more rate cuts. The Fed is saying we're going to have 3. So there's got to be some kind of come together of those ideas. So the market could be a little unsteady as the reality meets the expectations of what rate cuts are. But the market has clearly forecast what direction it wants to go in as we exit this high interest rate, high inflation environment, and that's up. And there was a risk-on trade that happened in the fourth quarter. Small cap outperformed large, value outperformed growth. And it's an example of the importance of diversification. After a year of large cap stock outperformance, it's important to have exposures in other parts of the market to pick up for areas that may underperform. And Valesco has those exposures across the broad stock market that will benefit the pension plans as we potentially have this transition into other asset class performance as interest rates come down as the market expects in 2024. So with that, I'll jump into the reports and start looking at the performance. So if we could go to page 1 and tab A and take a look at the non-salaried DB plan. The equity allocation at the end of the year was 65% equity. That's right in the middle of your investment policy range. And the remainder of the 35% of the portfolio is in bonds, 7% in inflation-protected securities, a little bit in cash, and then in the blue, the remainder in just broad fixed income holdings at 26%. So everything's in line with your investment policy ranges at the end of the year. So on the next page, we take a look at how that 65% of equity is allocated across the asset class spectrum. Your largest holding is the S&P 500, which was the best performing asset class in all of 2023, but we also spread money down the capitalization spectrum and have about 30% in international, which was in 2023, the big developed large cap blend part that's 18.5%, that actually was the second or third best performing asset class behind large cap and value. It actually outperformed mid cap and small cap last year. So another idea of having some beneficial diversification in the portfolio. I do want to briefly highlight a few changes that we did make to the holdings in the portfolio, equity portfolio during the quarter. We introduced a few new funds just to get continued exposure to high quality, profitable companies. We already have that through the S&P 500 index series and the funds that we use, but we added a couple funds. We swapped out the large cap value fund and our small cap. We have introduced a small cap value fund and made some changes in the mid cap space, but and then had a little bit of a sleeve of a high profitability fund that we added to the large cap blend. But there was no change in the asset allocation between large, mid, and small. That all remained the same. We wanted to keep those same blends that we have there. Just introduce a few more funds to get more exposure to highly profitable companies, which have an higher expected return long term. So just a few little changes there. I can show you the funds when we get to the portfolio holdings. On fixed income on page 3, continued to have a neutral duration to the bond market, 6.2 years. The yields have come down a tiny bit from the 5% range to about 4.5%, but that's in response to the expectation of the Fed cutting rates in sometime this year. So that wasn't unexpected. No changes in the bond portfolio, and we continue to have about 7% exposure to TIPS. That's on page 4, so no changes there. We move to look at performance on page 5 in the non-salaried plan. You can see in the quarter to date, your returns were just under 10%, 9.75%, a gain of $3.3 million, and a value at the end of the period of $37.1 million. We've had a little bit of a downside at the beginning of January. We've brought that back. So basically the portfolio holdings are flat at this $37.1 million as of the close yesterday. So no real change in the month of January to these very strong numbers. And when you look at the 1-year returns, 15%, almost $5 million, $4.9 million at the end of the year. Just taking a little bit of an analytical look at where you are towards the end of the plan year, which is on March 31st, you're now, as of the close yesterday, on pace for a return of just over 9%. So that's on pace to reach your 7% target return rate. So that's a positive thing that where we are with about 2 months left to go in your plan year. When we go out to 3 years, you can see that we've had several bear markets here. The returns may not be something to jump up and down about, but 4% return, $4.2 million, fairly reasonable returns given the environment that we've been in, especially in 2022 during that time period. And then the inception period, which takes us back to just before the beginning of the pandemic, $9 million gain and a return of just under 7% back to that time period in January of 2020. We go to page 6, just a quick look at the performance and how that changed in the quarter, highlighting that return that I talked about, that little bit of risk on return. So you see your return in the quarter at the top of the page in gray is the equity returns, almost 12% return for the overarching equity, and that was a little bit better than the S&P 500 during the quarter. Large cap value, 13.6%. Small caps, the best performing asset class. So really a comeback return after a difficult first part of the year for small cap stocks, up 15% in the quarter. So you can see that diversification helping out a little bit ahead of the global benchmark. That's the one at the top, MSCI ACWI, All Country World. When we go to the 1-year returns, it clearly was a large cap year, driven by a very small number of stocks, but the S&P certainly had a good return at 26.2%. All the other asset classes a little bit behind that, but I do want to highlight that MSCI EAFE, EAFE. That's your developed international world. That's Europe, Japan, Australia. Those countries had a very good return and actually outperformed domestic mid-cap and small-cap stocks. So another idea of diversification in one part of the market or asset allocation helping out when some other parts underperform. And when we look back in the 3-year time period, when we look at that, just about a little over 7.5% return, it's certainly in line with the long-term rates of return for the stock market. Value is the best performing asset class over the last 3 years, outperforming the S&P 500. So that's just the impact of higher interest rates, higher yields, and the effect that that had on technology stocks. We saw that in 2022. They were really beaten up, and that's still playing out through the performance of those asset classes over 3 years. And then finally, when we look at the inception return for your equities, 9%, very strong returns for equities over the last 3+ years, and large cap stocks do outperform during that time period. When we come down to the next line, taking a look at fixed income, this is where you really see the big difference, I think, often in terms of portfolio performance and the contributions that bonds can have. In the quarter and year to date, we're having 5 to 6% returns. That's because interest rates have been normalized. We're up towards 4.5%, 5% yield in bonds. That's where bonds give you some ability to have price appreciation when yields come down. So that's certainly a benefit that we're going to see. Higher yielding securities, higher total returns out of the bonds, and this ability for diversification performance. That's certainly not what we've seen. Our relationship has a long history, but it does go back a couple of years, and you can see the impact that the interest rate increases had on the bond portfolio, where we've had a loss of about 50 basis points back to 2000. But that's the price that you pay for the better yielding securities that we have now in the portfolio, and the opportunity for fixed income to actually have better performance going forward. You'll see a little bit of benefit there too in the performance versus the benchmark. That was when we had the shortened duration, and now our neutralized portfolio in line with the bond market. You can see the performance is very much more in line in the quarter and year to date. And then the real return assets certainly have had a benefit as inflation has gone up. That 3.25% performance back to inception, very helpful. A little bit less than the regular bond market now, but that's what you'd expect with inflation coming down from the levels that it had been over the last couple of years. So with that, any questions at all about the allocation or performance before I run through the other two portfolios?
Yes. A lot of companies start on that. How's that performing now?
Well, it's certainly been a driver of the performance of those large cap technology stocks, the Magnificent Seven that you hear, both from the chip conductors and Microsoft and all those companies. So it's a part of what's driven their performance over the last year or so. And it's certainly filtering down through because they're selling that technology into companies all across the economy. So it's certainly driving things. But as a opportunity to invest, it's certainly important, and we have a lot of exposure to that. But the problem comes with after you've had stocks and companies that have moved up so high, can they continue to meet the market expectations? And those expectations get very, very high. So even when they, if they don't meet the market's expectations, it's just the opposite of that surge in prices I talked about. You have a downturn. So there's a risk in building a portfolio that loads up on that type of exposure. So that's why we have a diversified portfolio. Almost 50% of our equities gets exposure to those big companies, but we have other areas to provide some diversification. The portfolio holdings on 7 and 8, the large cap value fund, AV, LV, and the dimensional high profitability and the small cap value. Those are the two new funds that we added, but they only represent a couple percent of the overall portfolio. So not a big change there. Just wanted to highlight those. And then if we go through to page 9, we'll take a look at the salaried plan, and I'll go through this much quicker because all the pension plans have the same asset allocation. So we don't need to go through this data in quite the same detail. I do that on the non-salaried plan. So real quick, looking at the salaried DB plan, same allocation, 65.8%. All the assets on this in line with the investment policy, 35% in fixed income. Similar allocation to 65% equity on page 10 when we look at that, about 47% in the large cap blend, 70-30 roughly between domestic and international stocks. We made those profitability changes to the funds in the equity side as well on page 10, fixed income on page 11, 90-10, neutralized the duration there back in the spring and performance is very strong. TIPS portfolio split between long-term and short-term TIPS with a blended yield there. In terms of the TIPS holdings, I want to make sure I provide that to you. I didn't do that on the previous fund. The blended yield on the TIPS fund somewhere in the range of about 4.3% in a duration of about 5, so a little bit less than the overall bond portfolio. Performance on page 13, you can see 10% return, still in the quarter to date, gain of $3.2 million. And then as we go into the 1 year returns, you see that 15% as well. In the performance, $4.8 million gain there, 4% return for the 3 year, and then inception return just under 7%, $8.9 million value at $36.5 million at the end of January. On page 14, same trajectory, looking at the quarter to date numbers, small cap and large cap outperformed. The 1 year returns 21%, a little bit behind the All Country World Index there. I didn't mention that before, but that's just because of very large cap oriented, so a lot of that large cap performance. But given the diversification, we were right on top of that benchmark for the 1 year period. You can see too, outperformed it over the last couple of years, primarily because we do have less international exposure, so taking some of that international risk off the table and getting more asset performance into domestic U.S. stocks. Fixed income returns stay the same, very close to the benchmarks in the quarter to date and 1 year period, and then a little bit better than the benchmarks because of our shorter duration. And then you see the real return performance on page 14. If we move to tab C on page 17, touch on the Utica plan very quickly. That's the smallest of the 3 plans, but the equity allocation the same at 65%, right in line with the investment policy range. Everything else in the portfolio holdings as well, in line with the investment policy at the end of the quarter. 65% equity, you can see on page 15, allocated in the same way for the Utica plan, 70-30 between domestic and international, large cap stocks holding the largest holding there, and we again made the profitability trades to the funds and the adjustments in this portfolio as well. 90-10 for the fixed income holdings as well, and page 30, the TIPS portfolio 60-40. So everything managed in the same way to the same allocation. The Utica plan on page 21 had very good performance as well, 9.75% return, a gain of just under $1 million, 11% return, $11.2 million value at the end of the quarter, 15% for the year, same returns across the board, inception date the same, January of 2020. And finally, you can see that the performance on page 22 looks the same as the other 2 plans. 12% return for equities, almost 21% for the year. So very good equity returns there. Any questions or thoughts on the allocation or performance?
And this is as of, remember, December 31st. The market's ran since then.
We had a little bit of a downturn, couple percent at the beginning of the year, which really I think was a lot of just rebalancing from the end of the year because it was so strong. And then in the last 2 weeks, we've basically gotten all that back, so it's flat for the most part as of the close yesterday. I know you've got a busy agenda and we're about 25 minutes in, but if I have a couple extra minutes, there's a couple slides I can talk about in the economic review. All right, I'll spend a couple minutes to do that. We go to page 26. Just a little bit of information about market perspectives and the importance of staying diversified. Bob and I had a side conversation here at the beginning of the meeting about what a tough year 2022 was. And this is an example of the data that we have here about why it's so important to be consistent with your allocation and not to be too active in how you react to markets when things are bad. History shows us that market rebounds come after tough markets. We had a bear market that the Fed induced by their interest rate increases in 2022. But the returns in 2023 were actually above average. It's, as the data you see on this page, in the 13 times the stock market declined by 20% going back to 1950, stocks were positive 10 of those times. It doesn't happen all the time, but 10 out of 13 is a pretty good probability that it's going to be higher. And when you look at the average returns out 1 year, it was about 17%. And we had a gain of 26 last year. So it was in line with the way the market reacts after a very difficult year. So investors that are worried and scale back their allocations in times like that in 2022 would have been very disappointed because of their return that you can get. And we got really all of it back for the most part in 2023. And you see at the bottom of the page on the frequency of stock market returns, the saying goes, it's all the time in the market, not timing the market, that helps you meet your long-term goals. And you can see over 15 years, there's never been a rolling time period where stocks have not advanced. But that's the risk that you have to take to get those returns. Another thing I want to talk about a little bit is page 27. And this goes a little bit to what Julius was asking about, just in terms of the AI impact on the market. So if you look at the performance here at the top of the page, it's actually not performance, it's the percentage of the S&P 500 of those top 10 holdings, which were really what drove the return. 65% of the S&P 500's return last year came out of those top 10 stocks. It drove the exposure on the S&P 500 up to about 30% of the index. That's the highest it's been going back 30 some years. It's been high before, but it's pretty high now. And so the worry is when you have that exposure to those stocks, outperformance of those companies that reach the top 10 historically peaks in the years leading up to that when they become some of the top 10 holdings. So after strong relative returns, the performance of those companies tends to disappoint and it actually lags going forward. And that's what you see at the bottom of the page. So this is looking back in the stock market, going all the way back, what the excess return is of the top 10 stocks in different types of markets. So 10 years before, 5 years before, and 3 years before they become the top 10. And so you get this outperformance at that point in time, up to 27%. And then going forward, those stocks tend not to be the best performing. And you actually have losses, as you can see, going out over the next 10 years and very flat returns going forward. So this is part of Alesco's strategy to have a diversified portfolio where we have exposure to lots of different asset classes and we're not overexposed in any one particular area. And then we can have the benefit of companies as they rise to the top, but we're not overexposed as those fall back. On page 28, just a little bit about inflation. That certainly is a topic that you deal with here as a business and everything that's going on. And the data shows here that inflation has definitely come back down, both core and services and the headline numbers. Had a little bit stronger numbers today. I kind of heard it on the radio when I pulled in, but didn't have enough time to really register what was going on. So this is just looking at headline data. It was up, roughly 12% on some of these data points going back to 2022. But the lower inflation, especially of the goods services, core goods, which you see here in the purple, that's really helped ease the pace of underlying price increases. But we still have higher services costs, so that plays into wages and housing. So that's really what's driving inflation now. But the core inflation has helped because supply chains have come down. You can see that the pressure that we had back during the pandemic is all kind of normalized. But there's obviously the concern that we have about the war in the Middle East and what that's doing to shipping. So this could be an issue that we face again, but we'll have to see how it plays out. But right now, inflation is on the right track, and that's part of why the Fed is thinking about starting to lower their interest rates sometime this year. That's what you see on page 29, the market dichotomy of where the Fed rate hikes might, or Fed rate decreases might come versus what the market is expecting. So you can see how high rates went up into 2022. Now in the purple at the chart on the top of the page shows where the Fed estimates are, their 3 rate cuts. The market's got more, and that's why you see that curve there. This is the reference I made to the disparity between expectations and what the Fed has said. So there's going to be some little bit of comeuppance here. Either the Fed's going to raise what the market expects, or there's going to be a little bit of a difference here. So the market's going to be choppy related to that, but the trajectory is going to be lower this year, and I think the Fed's probably going to stick with that. Interesting chart at the bottom of the page shows you how much rates have come up. The yield curves moved up from 2021, where we basically had flat interest rates and zero yields. Now we're back up to, it's still an inverted yield curve, but that's because the market's expecting those rate cuts next year. Short-term rates are still higher, and then as we kind of move through 2024, that yield curve could potentially come back to normal and have more of a sloping pattern. But the bond market last year, I didn't really focus much on that, had an amazing year. The bond market returned about 8.5% in the last 2 months as yields came down, ended the year up about 5.5%. We haven't seen returns like that in a long time, and that's because yields are normalized, and that's a very good thing for managing portfolios. So I think that's about it. I know I don't want to go too much longer. There's some data in the book, a couple pages back, to talk about valuations, but we've talked about that before. Small cap value, much more the prices are much more reasonable compared to large cap. And so that's partly why we have those exposures in our portfolio that we think will benefit the pension plan going forward. Any questions or thoughts?
That was a good report.
Thank you.
Very good report.
Oh,
I was just thinking, since this is the election year, and I know policies can fail, big
Yeah.
role in this, outcome.
Yeah.
Um,
So I think the market is now just starting to think about the potential policy divergences depending on where who ends up winning the election. And at the moment, it's a little bit of a trade-off in terms of what the market's expecting. From a political perspective, President Biden looks weak. Former President Trump looks strong, but plenty of people don't want to see him back in office. So it's a very strange situation that we're in. That two very somewhat unpopular people are leading their parties potentially into the election. So that will be, we don't know how that's going to play out. But in a typical, if there is a typical election year, how that plays out, the market is somewhat choppy leading up into the election, and then once the polls and the parties solidify in terms of where you're going to see the victory coming from which party, and we may not see that even through the election this year. As we've had the uncertainty about outcomes, the market is going to swing. Well, it's going to play out based on where the policies are going to go. Today, there was some news about the Biden administration pausing permitting for liquid natural gas. And there's an element of politics with that, trying to look for, make sure that the farthest left on their policy change for the Democrats are supporting them going into the election to make sure that they're fired up to support the president for the election. So I don't have any good crystal balls about where the market's going to go. It certainly will have an element, the presidential election, but I think a bigger part of that is going to be related to inflation and the interest rates and what the Fed does. But then they're not going to be able to raise interest rates as you get into the fall. So they're going to have to make their decisions about what to do by sometime in the summer. So I think in the next 2 quarters, we'll have a better sense of where the market's heading towards the end of the year. And maybe the election outcomes might look a little bit more clear. But there's plenty of talk too about a third party this year and people supporting them. I've certainly had conversations about people thinking that's much more of a possibility this year. It's never been a factor too much in presidential elections other than affecting one party or the other. But that's another uncertainty that we'll be dealing with in the markets this year. So thank you for letting me provide a non-answer to your question.
Yeah, good report. It's good about that. I was thinking of Jackie over here with the employment, how difficult it is. You have a page there on the unemployment, how tight it is right now.
It still is.
Yeah.
So I think the impact on the employment market, and we're starting to see stories about job cuts in the technology sector. So that's another weight that's overhanging some of these big tech companies that have had such good stock performance. But that's not necessarily because they're really underperforming. It's because they overhired people 2 or 3 years ago. There were crazy stories in the Wall Street Journal in the last spring and summer about people that were hired at these companies that weren't doing anything. So that's kind of crazy that they overhired, but they were worried about growth and not being able to find people. So that's explainable. So with that, the job market from a open position is easing up more than anything else. But it's still difficult to find workers and have people that have the skills in the places where you want them. So that certainly is an issue that we're still dealing with, and the job market doesn't seem like that's going to ease up anytime soon. But companies the open jobs are not as open. There's not as many of them as there had been in the past. So that's a bit of a change over the last couple of years.
I do keep in contact with the Blue Book. You know, some numbers. So if I see what they're saying, Blue Book.
Yeah.
My daughter worked for them, so.
Oh. Keeps you worried all the time, right?
You know, Tim, I noticed another workforce that's emerging that I have seen get tapped is retirees.
Yeah.
That still have a lot of gas in the tank,
Well,
okay? And, have a great work ethic, have a really good work ethic.
yeah.
So that's something that I've been dealing with, which I'm very happy of, because it's sometimes different generations or the newer generations seem to move quite quickly.
Yeah.
So, but that retired, I mean, I'm thinking much different than I would have probably 15 years ago. But I noticed that even in a part-time capacity, their dedication, their productivity, their knowledge is really right on pace. So that's an interesting, maybe I'll write a book on that. I don't know. Jackie, you're gonna help me with that?
I can help you there.
Okay, all right.
Yeah, that's something.
That's-
The trend that you're talking about, I think, certainly has accelerated, and the technology and some of our experiences through the pandemic has benefited that cohort of the workforce, that you can stay involved, stay working, and maybe pull back a little bit part-time, and there's some potential remote opportunities. So that's certainly helped the number of workers in the workforce. But younger people complain that the older people aren't moving out fast enough. So
If the young,
I'm trying to get Monty to get his resume updated.
if the young people want to.
It's still in there somewhere.
I can't from like, it's possible to do it.
yeah, exactly.
Thank you.
Thank you. We appreciate your trust in Lesco, and we love having the relationship with you. So thank you.
Any other questions for Tim? If there's no more questions, thank you for your
Thank you.
Thank you.
presentation. Great job.
Yeah, you're aware.
And that concludes our pension committee meeting.
Okay, very good. We're gonna go right into audit and finance committee meeting. Thank you, Tim. Safe travels.
you.
I saw him outside.
He is out there? Okay, so he's here, you just gotta be quiet. I can't put it up there.
Here today to talk to us about the Oneida Hub liability renewal, I'm sorry.
Yeah. Good morning, everybody. There's a bunch. We operate under Central Oneida, two different hubs. One on Elizabeth Street in Utica, and the other West Liberty Street in Rome. We buy our first dollar liability as required by our leases with our landlords. The limits are $1 million per occurrence, $2 million aggregate. Our excess policies apply in excess of these contracts. Last year's cost was $47,762, and this year's cost will be $51,239. Same carrier, same conditions.
So minimal increase there, very minimal. Just wait till that goes around the table.
Okay.
Okay, so we're looking at little bit under 4,000, around 4,000. Any questions for John? No questions for John with that being said, may I have a motion? Okay, Tina, second, Darlene, any discussion? All in favor, aye? Thanks, John.
Okay, have a great day, everybody.
Got it. Take care.
Yeah.
Okay,
I'll get you this one.
we're gonna go right into our third quarter financial statements. Lynn.
Thank you. Good morning, everyone. It's a quarter end, so this month we are presenting the statement of net position. As of December 31st, the authority's quick ratio is 7.01, meaning that for every $1 in current liabilities, the authority has $7.01 in current assets. Very good ratio. Current assets have increased 11.9 million or 26% compared to December 2022. Our cash and cash equivalents and investments increased by 40% compared to the same quarter in prior year. This change is attributed to the interest generated from investments, the STOA increase, and fewer federally funded asset purchases in current year. So the authority continues to maintain a positive cash position, and this enables the authority to capitalize on investment opportunities and adequately fund reserves in the future. Receivables have increased 12%, amounting to 1.2 million compared to December 2022. And this increase is primarily driven by the net impact of the new GASB 75 lease receivables coupled with a decrease in grant receivables. Current liabilities have increased by 2 million or 43% compared to December 2022. Accounts payable and accruals increased by 32%, amounting to 577,000 compared to December 2022. This upswing is attributed to higher balances in our AP and grants payables, and this change is mainly attributed to the timing of the last check processing period of the month. Accrued salaries, liabilities, and benefits saw a 26% increase, amounting to 561,000 compared to December 2022. The increase is a result of the timing of the last pay period of the month. A full pay period was accrued in December and paid in January. Estimated claims payable balance increased by 909,000 compared to December 2022. This increase is attributed to the March 31st, 2023 adjustment to the UMR IBNR. For our statement of revenues and expenditures, after 9 months ending December 31st, consolidated operating income before capital contributions and non-operating expenses is 5.5 million. One of the things I wanted to note on this slide, if you look at the personnel expenses, and I'll speak to this in a future slide too as well. Personnel expenses is not just salaries and wages, it includes other things like the workers' comp, pension, payroll taxes, etc. The variance is 6.8 million of our 8.7 million total operating expense variance. That's about 78% variance. And just want to note that in a future slide, I'll explain more. Operating revenues are 2% over budget and 8% over prior year and 12% over fiscal year 22. Regular line passenger revenues have surpassed budget expectation by 11% and exceed prior year by 22%. Currently, our fixed route and paratransit ridership continued to trend positively over prior year with an increase of 13% and 18% respectively. Our pass sale revenues continue to outperform both budget and prior year, and these trends are driven by the increase in our ticket vending machine sales and passes purchased through medical answering service. Special line revenues are in line with budget and 2% over prior year, and this is due to contracted increases. Our advertising and other revenues are exceeding budget by 4% and prior year by 5%, and the positive variance is attributed to our favorable performance of the RTC parking lot. Operating expenses are 13% under budget and are 8% over prior year and 9% over fiscal year 22. I'm not gonna go into a lot of in-depth on these lines. These are the same variances we've been experiencing. But as I said before, our personnel-related expenses, which make up pretty much the 5 top lines of our financial statement, they make up 6.8 million of the 8.7 variance. And just so everybody is aware, we are budgeted based on being 100% staffed in our departments. We know we're not 100% staffed, and that is what is feeding this variance. And I just wanted to make that point, because that's the biggest part of our variance. Purchase transportation is the only expense line that is trending under budget, or over budget, I'm sorry, and it continues to exceed budget by 28%, and we're over prior year by 40%. We are really maximizing our resources for this service. Any questions on any of the things so far? Our non-operating revenue are 6% under budget and 4% over prior year and 3% over fiscal year 22. Operating assistance is 3.2 million or 6% under budget and 2.6 million or 6% over prior year. And this variance is primarily attributed to our increased DOA, the reduced requirement for our federal funding, which is currently our ARP. We draw this assistance based on operational needs. MRT currently still trending below budget and prior year. And the decline is due to the mortgage tax receipts, is due to the interest rates. And our investment revenue is currently 859,000 over budget and 900,000 over prior year. We continue to maximize investment opportunities with favorable performance and interest for U.S. Treasury bills.
That's a really good job by you guys.
This is a slide showing the mortgage tax revenue. As you can see in fiscal year 24, exceeding our fiscal year 20, still exceeding our fiscal year 20 receipts. For our investment report, as of December 31st, the unrestricted operating fund totals 15 million. The cash balance decrease from prior month is attributed to regular monthly operating expenses and capital asset purchases and an investment purchase. The money market board designated funds total approximately 3.5 million. The money market investment accounts are providing interest rates between 2.1 and 3.5% at this time. And the total treasury bill investments include 12.3 million of our board designated reserve funds, and we invested 5 million of operating funds. At maturity, the anticipated return is approximately $355,000. And just so you, as a reminder, board designated reserves are accounts to retain emergency funds for unanticipated future events.
Go back to the prior slide.
Sure.
Yeah, 1 second. Did you say 15,000? 15 million?
15 million.
We're averaging up then.
Yes,
Okay.
the 14.8.
That's what I said in my head, but I'm like, okay,
I'm
thank
good now.
you. Thanks.
Statement of cash flow, as of December 31st, the total unrestricted cash balance is approximately 15 million. We received 1.8 million from operations and MRT and an additional 457,000 in federal and state reimbursed funds. These funds are expended in prior periods for capital purchase and operating assistance. And then we expended 6.5 million on daily operational needs and capital asset purchases. So at the end of December, the combined cash balance is $36 million, of which 16 million is board designated reserves as emergency funds for anticipated future events. Any questions on the statement of cash flow? or any other statements?
Cynthia, I'm still concerned about how much we're spending for Colibus, for sending things out. That's a lot. It is eventually going to be a problem. And we're actually paying, to get on my soapbox for 5 seconds, we're paying for substandard transportation. I hate riding with the subsidiaries. I love it when the call tells me there'll be a Colibus event. Because I know I'm being strapped in properly, I know I'm cared for properly. We've gotta find a way, if we're gonna spend all this money, to make it better. My soapbox.
No, that's a good point. Let's comment on that. Maybe, how's the impact of labor? Okay, we know we're short, okay? So then we have to rely on third party, which I understand what you're saying, Tina.
My suggestion, and I've suggested this a ton of times and it's not gone anywhere. I believe every driver that drives for one of our subsidiaries should come in here and take the class that our drivers take and really just super be held. This is our standard and you're gonna hold it.
Then we'd be hired.
No, we did, bring them in for a training class.
It would be an abbreviated class, because the majority of our training class is designated to the 40-foot buses, but we do a training and a review, and Josh isn't here to speak to it, but we do train the operators on our policies, procedures. And we're working with operations staff right now to reestablish that supervisor to get out there and do the road checks, do the health checks, which has been successful.
Yeah, you caught a lot of the naughty ones. They'll tell me, you told me I was not doing this right, and I got caught.
Yeah.
And I said, yep.
So we've put measures in play to help mitigate that, and we're continuing to move forward with developing that plan further to continue that. So.
But sometimes it's just sloppy, and I don't like riding sloppy. None of us like riding sloppy.
We accept liability.
Huh?
We accept liability. When a guy's driving sloppy, we're accepting that liability.
Okay, so I think what we're getting at here, Chris and your team, at least let's start with bringing in the point of contacts for their company. I know you talked about that before, actually, recently. Bring them in, bring your team to the table, talk about our expectations, talk about these concerns, not mentioning somebody's name.
I don't care if they know because I broadcast it.
Okay. And then let's start with that, and then maybe we can come up with some type of, I know you've been.
And Chris, I would be willing to come in and talk at that meeting and say,
Maybe we do.
this is what this is, as a Colibus rider, this is what I feel. This is what as a board member, I feel that this, and can we get it together?
Yeah, we can certainly expand that, continue to get to that point, for sure.
Okay, I think that's good. I'd like to actually see it. Yeah, good. Very good. I'm sorry, Linda, are you?
With that concludes the finance
Thank
report.
you, Tina, too, for your comments. With that being said, any questions for Linda? If there's no questions, may I have a motion? Luella, second, Monty, any discussion? All in favor? Aye. Okay. Moving on. Okay, Jackie, you talk to us about our substance abuse policy update.
Good morning, board members and Mr. Chairman. As I mentioned last month, an independent consulting company was hired by the Federal Transit Administration to conduct drug and alcohol audit of FTA recipients. Obviously, Centro qualifies as a direct recipient under the FTA because we're federally funded. One aspect of this audit was for them to review our drug and alcohol policy or our substance abuse policy for updates to be in compliance under FTA regulations. The consultant proposed some minor changes to the Central substance abuse policy. They recommended revisions requiring clarifications to Centro's current procedures, just basically documenting those. And there were no substantial, oh my gosh.
Happy Friday.
Changes to the policy or how it's administered or that. The updated revised policy was emailed out to all the board members that highlighted the changes. There are some on the table if you'd like to see them in writing. At this point, are there any questions? If not, then I just need a motion from the board of members to adopt the revised central substance abuse policy.
Questions, Julius?
Oh, I was making a motion.
Okay.
Oh,
anybody
your
have a question?
motion.
I'm sorry.
We're
Anybody
ready
have
for the
questions?
Any questions?
Robert?
While we're on the subject of Callabus and contracted out services, are the people that we contract to, are they subject to any of these?
Absolutely. Absolutely they are. They're in our pool and, they go through the entire process.
Questions on the policy? I know we have okay, so let's have a motion to adopt the changes that we're making. Julius, second, Tina, any discussion? All in favor? Aye.
Thank you.
Thanks, Jackie, good job. Okay. How's Tara today?
Excellent, how are you?
Good. Tara's gonna come up and talk about 5307, 5339 grant application.
Good morning, everyone. I am here to request authorization to move forward with filing for the federal fiscal year 2024
Resolution
You'll sign
38, folks, this the orange paper.
and 5339 grant application. Within this application, there are various projects that are attached to your resolution. That is the program that is in our TIP in the New York State STIP. And if you have any questions about that list, I'll be happy to answer them. The grant will be total value at $48.5 million, 38.8 in federal funds.
Questions regarding the grant application?
Just wondering, do you ever have to get or buying for it?
It's appropriated to us, so we automatic of sorts.
Okay, may I have a motion? Robert, second, Darlene, any discussion? All in favor, aye, thank you, Tara.
Thank you.
Caitlin. Caitlin's gonna talk to us about, we'll start with the Syracuse Facility Janitorial Services. That is the yellow page, that's resolution number 3.
Thank you, Mr. Chairman. Good morning, everyone. So this is the resolution for the Syracuse Facility Janitorial Services. This will be paid for with operating funds. So New York State procurement guidelines mandate that we look to New York State preferred sources for services and commodities prior to competitively bidding where it's applicable. Janitorial services are available through the New York State Industries for the Disabled. So we reached out to their partner company, Human Technologies Corporation, for pricing. They offered an annual price of $228,581.45. And this will have an annual increase on the labor rates per New York State prevailing wages. So we're looking for an award to Human Technologies Corporation for a full 5-year term.
Any questions on that for the Syracuse facility? May I have a motion? Tina, second, Darlene, any discussion? All in favor, aye.
So the next resolution is for the Utica Facility Janitorial Services. This has the same requirements. So we once again reached out to Human Technologies Corporation for their pricing. They offered a price annually of $51,218.63, again, subject to an annual labor increase per prevailing wages. So we're looking for award for the Utica facility to Human Technologies for a 5-year term.
Any questions for Caitlin? May I have a motion? Neil, second, Tina, any discussion? All in favor? Aye. Moving on here.
So the next resolution is for the Transit Advertising Services contract. This is a revenue contract. This request for proposal was publicly let on October 12th. We invited 9 vendors and 31 proposal packages were downloaded. On November 13th, we received 4 proposals, and the evaluation committee determined that Lamar Transit Advertising offered the most advantageous proposal. They offered an escalating minimum annual guarantee for each contract year, starting at $1,025,000 for year one, with an escalating revenue share percentage starting at 60%, whichever of the two is greater. So we're looking at, for award for the transit advertising services contract for a 5-year term to Lamar Transit Advertising.
Questions regarding a 5-year contract for Lamar Transit Advertising? May I have a motion? Julius, second. Darlene, any discussion?
Can I ask a
Yeah, go ahead.
question about this? Okay, when I joined the board years ago, we had a contract with a company, and basically, we never made money with it. Are we now making money with the advertising?
We
Yes.
are. Is
Yeah.
Steve here?
Steve is not here, but Nicole is here, who is our,
Good morning, everyone.
our transit rep, who works hard. So any of the buses that are out on the street that you see with different wraps, the whole, an entire wrap, a quarter wrap, a rear, that's all advertising space that Nicole would sell that generates a percentage of the revenue.
But again, there was a time period where, for a lot of different reasons,
Right.
it wasn't a positive cash flow.
Correct, now it is, yes.
But now, we're hitting, I believe, Nicole, correct me if I'm wrong, we're above our minimum guarantee on a
We are.
regular basis.
Yeah, there was, some years ago, you're right, there was some
Yeah.
problems
Pretty
with collecting.
I mean, you saw all the buses had ads on them, and we weren't benefiting.
Yeah. No, we are now, we have been in the last few.
So I have a motion and a second discussion. All in favor? Aye. Okay, we're gonna go back to the ultrasonic parts cleaner purchase, Kayla.
This contract will be paid for with grant funding and 80-10-10 split between federal, state, and local funds. This was an invitation to bid. It was publicly let on November 21st. We invited 8 vendors and 12 bid packages were downloaded. We received 3 bids on December 13th, with the lowest responsible bidder being SharperTech. They offered a price of $71,040 for the piece of equipment. So we're looking for award to SharperTech for the ultrasonic parts cleaner purchase.
Any questions regarding that? Funded? Motion? Motion? Okay, Darlene, second Neil. Any discussion? All in favor? Aye. Okay. Linda, any other business?
That concludes everything for Diana.
Melissa, you wanna say anything, or?
No, I'm good, thank you.
Very good. Okay, that concludes our audit and finance committee. We'll take about 5 minutes. board meeting today. I can't believe it's January 26th. Start with the pledge of allegiance here. Melissa's gonna lead us in the pledge.
I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, our next meeting date is February 23rd. Audit and finance at 9, board meeting at 9:30. May I have a motion to approve the regular minutes of December 15th, 23? Okay, Tina, second Julius, any discussion? All in favor? Aye. May I have a motion to approve the special meeting minutes of December 29th, 23? Tina, second. Luella, any discussion? All in favor? Aye. May I have a motion to approve the special meeting minutes on January 5th, 24? Darlene, second. Tina, any discussion? All in favor? Aye. Okay, at this point, our Deputy Chief Executive Officer, Chris Tuff, on his report from the senior staff.
Thank you, Mr. Chairman. Good morning, members of the board. Quick update on COVID funds. So we continue to draw down the remaining COVID funds that we have left in the ARP funds, just shy of $1.3 million for December of 2023. And we'll continue to use those funds in the coming year and months. Legislative meetings. So as we know, the budget season is kicked off for our New York State STOA operating assistants. Steve Cagle and myself have been meeting across the county and traveling outside to our 4-county service area to meet with legislators. At the time of this report, we met with Assemblymember Magnarelli and Senator May. But since then, we've also met with Assemblyman Sturpey, Mannion, Senator Mannion. We're scheduling appointments for the rest of our delegations in our service area. For the NIPTA ask, we started off with 15% ask in state operating assistance, which has been consistent with our ask the last several years. We're hopeful that we're going to continue to see that level of increase. Last year, we were about 13%. We know early on the budget office has identified upcoming state deficits, but since then they've declined based on projections. The executive budget was announced by Governor Hochul back on January 16th. So based on the projections we received, it was a flat increase. She actually came forth with a 5.4% state operating assistance increase, which we greatly appreciate, but we're also still out there lobbying for our 15% increase and asking for more. So we're going to continue to work with our state NIPTA, the New York Public Transportation Association partners in that, across the Thruway and Downstate and other smaller agencies to continue to ask for that 15% to increase and help support the transit needs. And also during the last month, we've had several meetings to discuss, recruiting, our capital planning, our employee incentive program, and of course our transportation consultants have been here several times, which his team and Brian will give you an update on. And from that concludes my report. If there's any questions. Steve?
Good morning, everybody.
Steve?
I want to give you an update on our ridership where it stands from the past month. It's a good month, as usual. Ridership was up overall about 9%. There was one fewer weekday than previous years, so when you factor it out, probably up 10% overall. Very good numbers in Syracuse, up 10%, up 8% in Auburn. Oswego was up double digits across the board in all properties. We're getting return of SUNY Oswego students using the service. That was up significantly in the month of December. And then we're seeing consistent increases in the month of January there as well. So it's good to see that more of the students there are using the services. I don't think we're going to get back to pre-pandemic levels there because their enrollment isn't what it was pre-pandemic. City of Utica is kind of flat. City of Utica is the only area where we're not seeing a significant increase over last year. It was up, in the raw numbers about 1%, but when you factor in that we're short a day, it was probably about 5%, but it's not double digits like it is everywhere else. And Rome, we're seeing significant ridership increases there, about 20% over last year. So it's been very strong. We continue to chip away at where we were pre-pandemic. We're probably about, our city services about 68% from where we were pre-pandemic, and overall closer to 73-74%. So we're getting where we need to be, and we'll continue to do what we can to increase ridership going forward. We're also excited to probably roll out mobile ticketing in the next month or so. We've included some internal testing with mobile ticketing, which is nice. It looks good. We're going to begin training operators and training staff on how it will operate and how it will be used. But this is a significant increase in technology for our customers. We don't anticipate it's going to be a huge portion of our users will use mobile ticketing, but those who will greatly appreciate it. It will help us with decreased boarding times. We hopefully will be able to use this in State Fair, which will significantly help our processes in State Fair. And this will allow us to make things easier for agencies to have passes on their phones if they want to have they want to subsidize their employees or their students riding their buses. So it's a significant step forward. You'll see marketing for this probably before our next board meeting, which is why I want to kind of give you guys a heads up. It's been a long time coming, but we're right there. So we're very excited about that.
Is it in all places?
Be all properties. Everyone will have access to mobile ticketing. You sign up with an account, attach a credit card to your account. You can order passes right on your phone. Never have to go to a kiosk. Never have to go to a store. Or never call us. You just get your passes online.
Many of the human service agencies ever called, kind of said that.
We'll see what happens now. Now it becomes public. I anticipate I'll get some phone calls from some agencies.
Even just to track one.
Yep. We've talked about, certainly Board of Education, maybe the City of Syracuse as well, using mobile ticketing. Yeah. It makes things easier. It really does. It's, you walk up, it beeps, the driver knows it beeps, and the driver will just have to do some occasional verification, but it's simple. It's just a training process of making sure the customer understands that if you activate that pass too soon, it will expire and it's gone. So you've got that's part of the training process and the how-to videos that we'll have online.
Can a mobile ticket, so a person, could they put it on their SNAP card or it'd be separate?
It'd be separate. It would be separate.
Is the Gen Fair update complete?
The Gen Fair update for mobile ticketing is complete, yes.
How's the fare box?
And the fare box is complete, so
It's complete across all.
all properties and locations have the new fare box system in. We closed, actually, talked with Terry yesterday, we closed that process out. So now it's just implementing the technologies and features of that box to the public.
You said elsewhere it's convenient.
That's,
Yeah.
a good one for it.
Yeah, and beyond that, there's the possibility of accepting credit cards right on the fare box, Google Pay, Apple Pay. That's the next step, and then potentially we will probably look at using some smart cards for agencies.
Yeah.
I think that we'd like to maybe have agencies that, like, again, want to have their workforce ride the bus. We can issue them a card that we can in the back end, we can run reports and see how many people from their agency used it and figure it out. But it reduces, it's good for drivers, it reduces conflicts. It's just a card, you're not worried about cash. It's less wear and tear on the fare box. A lot of benefits to having different types of payment options for our customers. And with that, I'm going to turn it over to Bren, who will give us an update on where our special projects are headed. And she's going to ask you to approve a resolution to move forward with our our on-demand service in Rome. Morning, Bren.
Good morning, Mr. Chairman and members of the board. Just a couple of updates on our special projects, but they're big updates. We're moving forward well. First, I wanted to start with BRT. We had an in-person series of workshops this month, actually last week here in Syracuse. And our consultants, Arcadis IBI, came out. We had 3 workshops, and the first one was about our implementation timeline. We discussed key milestones, discussed how we will phase the bus rapid transit program, and our target date for rollout is fall of 2026. The second workshop we had was a costing consideration discussion, and we got a little bit further in. We started out with a cursory review of cost estimates associated with marketing, with the making improvements. We know that the last time when the Smart One study was completed was only a few years ago, but was quite a long time ago in the terms of where money has gone, right? So we needed to reevaluate what our costs will be. And this will allow us to make further informed decisions about our planning and implementation when our funds come in, and how we can phase our approach of the BRT system. And this will include considering street infrastructure improvements, potential TSP costs, signal improvements, etc. So there's a lot involved in that. Of course, any buses that we need and all of those expenses, we're trying to make sure that we're covering them all. The third workshop we had was, was a BRT collaboration. So we invited the city, the county, and the SMTC to join us for that conversation. We really just wanted to make sure that we were communicating well with our partners. Of course, the city and us and SMTC and the county, we will all be working closely as we move this project forward. So got to review roles and responsibilities with them, and identified the next steps for the BRT collaboration. In 2024, we'll see a lot of more stakeholder outreach and collaboration efforts. So excited to look forward to that. So again, those workshops were great, and we are glad to have Arcadis IBI, our consultants, to help us with that process. Now I will move slightly out of the way so y'all can see this slideshow behind me. You have seen the information about our system redesign that we're working on in Rome and the on-demand service, but we wanted to give you a formal presentation before I ask you to vote on the proposed redesign in the city of Rome. So this is our current Rome system map. You can see there's a lot going on this map. We have a lot of turns and a little bit of spaghetti-ness, and this is basically what our system map looked like when we inherited the system in 2005. So we haven't seen much changes at all in Rome since then. So here we are with our proposed Rome transit system. This is what it's going to look like, what we've planned for it to look like. It looks very similar, right? The 3 lines that we are keeping are the Walmart line, the Black River Boulevard line, and the Griffiths line. Those are 2, 5, and 6. And those routes are being streamlined. So these are the fixed route routes that are staying. You can see this purple border around it. That is exactly where our paratransit service currently exists. So paratransit will not change at all in Rome. This is where we've decided our proposed zone is for on-demand. And actually, I'm slightly wrong, because right here, this Family Dollar Distribution Center, you can see in your packets that our purple bubble includes this employment center. We thought that that was an important element to include, especially since we were so close to the entrance of their facility, and we have, it's a big employment center, so we wanted to make sure to include that. And back up just one second, Chris, thank you. In the top corner, and again in your packet, you can see we've proposed that if you are going from any point in this location to the hub, it is going to be $1. We made sure to keep that cost of $1 for the customers that have that $1 cost now. If you are going from any place in the zone to another location, not the hub, then it's going to be a $4 charge. Still much cheaper than taxi or Uber, if you can find it in Rome, that is a challenge. So we just wanted to make sure to give that $1 option so that customers don't have to see a big increase in their costs. So, what is Centro doing to transform Rome's transit network? It's a new combination of fixed route and mobility on demand. I think we told you last month that the name is Move. So the Move service will be just providing flexibility and more options to our customer. And you can see it's appropriately sized for the Rome community. It's more responsive to current community mobility needs, and it engages the latest mobility service technology. We're super excited to be working with our vendor, Via, who is providing these amazing algorithms that do all this fancy stuff behind the scenes to make sure that we are most efficient in picking up our customers, giving them a useful ride, and being efficient in our service as well. So making efficient use of available transit resources. Overall, Centro aims to invest its fixed route resources where they can be most effective. So we're looking to provide more attractive options that serve more destinations and increase ridership. We talked this week with Via about what our main goals will be so that we can have key indicators to track how the process is going. So we'll be able to show you that after we roll out and how we're moving forward in hitting these goals. We're improving the customer experience. We plan to increase access to services through this point-to-point coverage. If you weren't on a fixed route before, you're probably on somewhere in the move zone now. So that's awesome. And just really adjusting service levels to fit the current demand and travel patterns. Again, it's been since 2005 that that this has not changed. So the population in Rome has changed, and we just want to make sure that our service is reflecting that. Maximizing service effectiveness and encouraging economic development so that we can just improve quality of life. So this is a little small, but it might be in your packet. I think it's in your packet. The proposed fixed route service is also going to improve. So right now we are at 45 minutes. Every 45 minutes you could catch a bus. You need to look at the schedule. We are proposing that we go to a 30-minute frequency. That increases our trips per day by 41%. That's huge. That also means that you don't really need a schedule. You know that the buses are going to be at the hub at 10 after and 20 of the hour. 10 after, 20 of. So I just need to look at my watch and go, yep, it's coming, and go out to the bus stop. I don't need to be as dependent on a schedule, which is awesome. And here's a sneak peek of what our vehicle is going to look like. They are working on the vehicles now. We are getting them wrapped. We are super excited. I cannot wait to see them. Next week we should have something finished so I can see how it looks. And again, the service will be customers reserving rides on their phone. They can also still call us. So if you don't have a smartphone, that doesn't prevent you from using the service. The software will combine rides, so this vehicle fits, I think, 10 or 11 folks still. We want to be combining rides. We want multiple people. It's not a taxi service. It is a shared ride service. The mobile phone payment option will be an option for customers, so that's exciting. They can also still pay on board the bus in cash. They'll not be bound to a fixed schedule, which will really increase flexibility, give customers a lot more options. And again, we're using smaller buses. We know that a 40-foot bus is not necessarily the solution to every transportation issue, right? So now we're looking at what else we can do. And here's another sneak peek, super exciting to see. You are not as excited as I am, but this slide is fantastic. This screen shows what you're gonna see when you open up the app. It's got our little Move bus on it, our little rendition of the city of wherever, of Centro's service. I don't want to say Rome or Syracuse. And our tagline is Centro's flexible option. So super excited. You're gonna open your app. It's gonna look like that. You're gonna get started, go right into this is where I wanna go. It shows your point of origin, your point of destination. It's gonna give you some options. And then once you book your ride, you meet your driver and it says, look, here's your vehicle coming along. I can watch it come to me. I can see that it's 2 minutes out, so I go outside or to the end of my block and meet your driver at a virtual bus stop. So all exciting things. Again, there's our mock-up of the vehicle. Our marketing team has worked so hard to pull all this marketing stuff together, and it is going to be awesome, and it's just looking really, really good. So, our next steps are now. So you have in your board packet the approval, the recommendation to approve the Rome Transit changes in our system.
May I ask a question?
Yes, sir.
So on your route here,
Mhm.
I know you're going by one medical center, the Ridgemere Medical Center. So if I needed to go there, am I is that a on-demand?
Remind me where that is.
It's at the top of the 5 by Mezzaferro's.
Okay, so Mazzaferro's, yep, is slightly outside of the fixed route area. So, yep, you would be able to just get on your app, use the on-demand system, and depending on where you were in the system, it could cost you $1 or $4 to jump up there, and you could get the ride in as little as 20 to 30 minutes from now.
And that would get me to the medical center.
Yes. Yes.
And the other medical center is the blue route, is on the fixed route, looks like.
Yes, so one of the questions we asked the public when we went out and surveyed them was, do you want front door or back door to the hospital? And there's a medical group on the back side, and I think the back side. There's a medical group on the west side, and the hospital is on the east side of that complex. So we asked questions about where they wanted to be. Most people didn't care, as long as we hit that. And obviously that's a good location that customers want to go to, so we wanted to make sure. We also wanted to make sure that the grocery stores were all on the lines, so we worked on that as well. Price Chopper, Aldi, Walmart.
Food and medical, yeah.
Yep, yeah. So, and the VA hospital, that's also on a fixed route, so I wanted to make sure to hit those big stops.
How's this gonna work with the train station?
The train station
I don't know who operates the Rome train station. I guess I should have started.
I don't either.
So it's the city of Rome oversees the facility. In the past, since we've taken over in 2005, we've used that as one of our office locations, and we're in and out. But honestly, there's no tenants there.
Yeah.
Really, if you book a trip, typically now you book it online, you have your mobile trip, and then you walk up on the platform and get on the train. So there's very little activity at that station, but you would still be able to serve it with the on-demand zone.
Yeah.
So.
Yeah, are you allowed on property, I guess?
Yeah, it's a very small facility. There's a parking lot. The building is probably 20 or 30 feet back from the road. There's a parking lot on either side, and then there's a flight of stairs that take you up to the train platform for people boarding and deboarding the plane. So we could pull on the property if need be. But I don't think you can get in the building, Steve, correct?
No, I don't think so.
Yeah, I think the building has been closed.
Yeah, been closed since 2019. Been no activity. It's just a historical monument that they wanted to keep.
And we did really look at where our stops were being most utilized. When we looked at this map and looked at the where we wanted to keep our fixed routes, down there near the train center is also approximately where the Rome garage is. That showed an uptick in ridership, and that was really because that's where our drivers are getting on and off, right? So other than that, that seems to be the most used location in that just south of the fixed route there. So we wanted to include it in the on-demand service, but didn't think that it needed to be on the fixed route. So in November, you had a preliminary equity analysis that was presented to the board. With the board's approval, we had a public hearing on January 4th. Oh, I didn't talk about that. So it was good. right? The public hearing, we had a public hearing on January 4th. Sometimes you get a lot of people, sometimes you don't, and I think we had a great turnout. We had probably 20 or so people attend, several good comments. We also left the public comment period open for another 2 weeks after the public hearing so that we would make sure that we got all of the feedback. And we knew that if we got something that dramatically contradicted what we were thinking, that we were gonna have to, slow down on our roll. We didn't. We got overwhelmingly positive responses. Some of the quotes I was writing down were, and you have this in your packet, wow, this sounds like a good service. There doesn't seem like any downside to this. It seems really easy. So a couple of questions did come in on Facebook that were not as positive, but for the most part, overwhelmingly positive response from the public, which was nice to hear and really meant that our outreach in advance last summer and last fall really had us going in the right direction. So that was great. So the public comment period ended on January 18th. That's why your board packet was a little bit slower because it was really close to that date that we needed to hand in for the board packet for today. But you have at the end of your this section, Resolution 3F, which talks about the service changes, the elimination of routes 4 and 7 in Rome, the combination of routes 5 and 9. That was that one that went up and up on one side of the hospital and down on the other side of the hospital. So we combined those. We're creating that micro transit zone, MOVE. So you can start calling it MOVE. I need to change my mindset as well because I'm not calling it that yet. And bless you. An increase of frequency overall on the remaining fixed route from 45 to 30 minutes. Again, all call bus service will remain unaffected, and that was really important to us to not take away service from anyone in the city of Rome. We're giving them more options, which is super exciting.
I thought the public meeting that we had went very well. The team, Steve, you did a great job presenting, and I think people left very positive at that meeting, which is good. And I think it's a good place to pilot something like this because it's a lot more manageable than a larger city to start it and work out the issues as we see them.
Agreed.
Okay, so we have a resolution here, the pink one, to authorize service modifications in Central Oneida. Everything has been vetted. So with that being said, I need a motion. Tina, second, Luella, any discussion? All in favor? Aye. Thank you.
Thank you.
Good job, Mike.
Thanks.
Good job.
All right, Jackie.
Good morning again. I'd like to provide an update on our recruiting initiatives that we've been undertaking this past month. An open house was held on January 6th for recruiting. We had 71 people visit our location to inquire about open positions. It was a mixture that we saw this time coming through the door. Candidates for like operators, mechanics, servicers, bus monitors, and color bus coordinators. The next driver's class is going to begin on February 5th. We currently have 13 operators for the Syracuse location, 2 for Oswego, 2 for Cayuga, and 3 for Utica at this time. So we're looking at a total of 20 we're going to start out with. One thing that we did do this time around is we actually offered a CDL prep class to the candidates who did not have their CDL licenses or permits coming in through the door. The class was held for 3 days. It was 2 hours each day. We had people who were interested who came to that open house sign up for the class, so we knew how many to expect. We had 17 people attend. They attended all 3 days. And from that class, we ended up with 3 people who got their CDL permit, and they are going to be in this next class. It's a start. I would have liked to have seen a little bit more, but at least they took the initiative. We knew that they were interested to get their CDLs. They stayed with us throughout the entire prep program, obtained their CDL permit, and they're coming, into this next class. One of the other things that we're looking at is recruiting and forming community partnerships. We recently met with Center State CEO, Syracuse City School District Secondary Education Program, and the Oswego County Workforce to see, what type of initiatives can we get involved in for individuals who are looking for jobs out there. I'm going to be reporting on this more so in the future because this is just starting out right now. So hopefully I'll have more to report on over the next few months.
Rick show up? I mean, I know he showed up.
Yes, Ricky showed up. Yep, for part-time.
Did he bring people with him?
Yes, he brought another individual with him.
Okay.
So
Is he gonna be
it's
driving?
a start. As far as I know, he is going to be part-time.
I'm gonna hit him again to find some more people.
Okay.
He knows
Yeah.
who's out there, who they are.
Absolutely, absolutely. If he starts driving for us, he'll get a recommendation.
So you get $500 for referring him?
A referral. No,
Wouldn't
he
I get
doesn't get.
1,000 because I got 2?
He doesn't get the referral, but Ricky would get a referral if he refers other drivers. So,
Yeah.
any other questions?
No, but I do have a success story. My sister told me of a friend of hers whose son came to the training classes, and he was thrilled to think that Central helped him get his driver's license for being a bus driver, and he's thrilled with his job. He's a family man, and it's just happy. They were all happy. The mom was happy.
Oh,
Report that.
I'm glad to hear those. Because
Yes,
sometimes
yes.
we don't get the
Exactly.
positive aspects,
Right.
and we're a lot of the negative,
This woman had
so.
no idea that my sister had any connection. She was just telling her. So that was, I was having my sister share it with
That's
me.
nice, yeah.
Yeah.
Thank you, Darlene, for sharing that. That's all I have.
Thanks, Jack.
Thank you.
Ramen?
Thank you, Chris. Thank you, everyone. Good morning. So it's been a very busy month in operations. First, I'll start with some vacancies. As you know, there's a driver shortage, and it's been increasingly difficult to fill work on a daily basis. As of this morning, there's 136 active full-time drivers in Syracuse, and our full staffing target is 185. So it is very challenging, and I can't say enough about the team we have, the entire operations team, from the director all the way down to our drivers. We are practically working miracles to keep service on the road, and it's not just for overtime. It is mostly because our people really care. On a daily basis, I'll hear things like, "Oh, we can't leave kids on the street," so people volunteer to work a certain run. So, it really says a lot. But that being said, it is an issue that we are really actively working on, as you've heard with Jackie's recruiting efforts. We are also looking for some supervisors and bus aides, so we are actively hiring for those positions. Moving on to some process improvements and initiatives. We have spoken several times about RISC, which is an abbreviation for Risk, Incident, and Safety Compliance. It was a software that was approved months back in a board meeting, and we've been working closely with the vendor to get that up and running. We're now at a point where we've made significant progress, and we're going to do a soft rollout with our supervisors. Just as a reminder of what it is, we're going to be changing our process of filing our incidents and accidents. It's going to be, done through mobile applications, so we can, file accident reports out in the field. And it's going to be very helpful to identify trends and improve, just our overall functions and processes as an organization. We're going to be doing a soft rollout, running it in parallel with our current processes, testing it, debugging, all the normal stuff when you roll out something new.
Ronan?
Yeah.
Are you gonna extend that to, again, the Colobus subcontractors?
We have not talked about that yet, but it's certainly something we could consider and talk through.
Typically with anything that's involved our contractors, that involves our customers, our supervisors report to the CU. So that software would be completed by our supervisor in a situation, so
Okay.
yes, but our staff usually handles that, so.
Yeah, I didn't think you were gonna let them
Yeah,
use your software,
yeah.
but I wanted to make sure that fast connect was made.
Certainly something we can talk about. Some other examples of process improvements and progress we're making. Every month we do a driver safety committee meeting, and I think we've made some really great progress on that. And I don't want to get too much in the nitty gritty on what goes on with those. It's a lot of little things that mean a lot. We've been really listening and trying to hear everything our drivers are saying. Any obstacles, hurdles they're facing. It ranges from mirrors might have spots on them. How can we work with maintenance to address some of those issues? To there was a recent issue where when drivers pick up phones in the garage, it was only the only number they could call was the dispatch number, and a lot of those phone calls would go to our maintenance department, our board man. So we worked with our IT department, came up with a solution so that they have multiple options. They can call directly somewhere else instead of us having to transfer. So it's minor process improvements, things that we can do to help make their lives easier. With that said, I think we've been making some real progress working with our union folks on that. And that's pretty much it for operations. I was going to call Josh. We have a quarterly call bus update, unless there's any questions. Okay.
Sir. Good morning. In your board packets was the third quarter call bus report.
It was on the table this morning and emailed to you as well. There's a hard copy.
Yeah, I think it was a late edition. We continue to trend upward. We're seeing a 15% increase over prior year. And that number is going to continue to grow as we move forward. Already this month, we received 50 new applications and still have another week to go. So I'm predicting we're going to continue to see a rise over the next year or so. Additionally, we did hire 2 new coordinators in the call bus department. Jackie kind of talked about that. We have one moving over from customer service and a new outside hire. So they'll be starting in the next, one starts next week and the other starts about 2 weeks after that. To help us deal with the increase in calls and volume. With that increased ridership, I know Tina, you talked about it earlier, is the oversight of our vendors. So weekly, we've been working with operations to get a supervisor assigned, and we've been focusing in on different things as we go along each month. So this month, we've been really harping on our door-to-door assistance with our vendor drivers. We have our supervisor go out, follow that vehicle, make sure it's adhering to speed limits, that sort of thing, and then make sure that they're actually giving that assistance to the door and from the door for our customers. So we have several different supervisors doing that. Additionally, with those supervisors, we started talking about our annual refresher training that comes up every spring. We do that with all of our vendors, all their drivers come in. We do it over several weekends. We bring them in, bring them here to make sure we're pushing out, hey, customer service, make sure that you're doing what you're supposed to. We look at things, we look at the trends of complaints that we're getting, talk with them, and then make sure everyone's on the same page, and we continue to send our supervisors out to follow up on And that's really all I have. Does anybody have any questions on the ridership report?
I am curious how the Call Bus is working in Auburn, because my dad had to use it and it wasn't a good experience. The Syracuse Call Bus was good, but then the return trip home was not, which was a vendor.
Was it vendor? Do you know what vendor it was, or?
I believe it was the Scat Man. This was a few
Okay,
years
the Scat
back.
Man.
I sure hope it's gotten better.
Yeah, so we subcontract out in Auburn to Scatman,
Mhm.
so some of their trips are done. They used to do a good portion of our trips, but ridership out there has increased. It's over 100% over prior year. We've had a couple people move out there to the new housing complex. I can't remember the name, Senate Meadows, I think it's called. So we've seen an increase from Senate Meadows. So more of that work's being done in-house with our Call Bus
Yes.
vehicles and drivers out there in Auburn.
Right, I didn't have a problem with the Call Bus.
It was the Scat Van.
Yeah,
So Scat Van we use to assist,
right.
because Call Bus out there a few years back was very scarce. So like you maybe have 2 or 3 trips a day total. So it wasn't even like you could make a tripper or even a full-time position out of it.
right.
So a lot of times we did subcontract. But now that we're seeing, 100% increase, we are starting to see more need for having a driver out
Okay,
there.
and this, like I say, this was a couple years ago
Yeah.
anyway, at least. So,
Yeah.
okay, I'm
The-
happy to hear that.
The percentage of in-house in Auburn has increased in recent times and years past.
Yeah, thank you.
Yep, no problem.
Jack, what is the -5% on the on-time performance?
So on-time performance, the on-time performance has gone down a little bit, but that is skewed more by Auburn and Oswego. Syracuse, we still remain right about the same, 96%. Auburn and Oswego, it's not late. Really, Auburn and Oswego, they have a little bit more time. They're usually getting there too early, but if they get there too early, we consider that still not on time. So if they're picking them up earlier than the window that we have, 15 minutes before or 15 minutes after, we still consider it a violation, but it's more on the early side than the late side.
Okay, I just wanted clarification.
Yeah.
What's the percentage amount that we're outsourcing right now?
Oh, the exact number, I'm not sure, it's close, it's like 87, 88%. It's currently being outsourced, and that's in Onondaga County. So Utica and Rome, we don't outsource any. And then Oswego is mostly done by their staff unless they don't have anybody to fill the work, then we'll fill it with a vendor. And then Auburn, I'd have to look at the numbers for Auburn, but I'd say it's probably closer to 75% in-house right now, 25% to the vendor out there, which is Scat Van, which is a nonprofit out there. Any other questions?
Thanks, Josh.
All right, thank you guys for your time.
Jack?
Thank you, Chris. Morning, Mr. Chairman. Morning, members of the board. I'm going to talk to you about some new equipment Caitlin brought to the board, the ultrasonic cleaner, and you guys approved it. Appreciate that, thank you. I was doing a comparison between an ultrasonic cleaner and a media blaster. The media blaster, probably known as the SAM blaster. The maintenance department is in need of some new equipment. What we have currently is very old and inadequate. The ultrasonic cleaner cleans parts by soaking in a chemical and sending out ultrasonic waves to break down carbon, oxidation, other various things to a microscopic level. In addition to that, it gets to really hard to replaces, like catalyst that has like a honeycomb metal pieces inside. You can break those down, get all that out, which is really good for what we need right now. In addition to that, it'll be used for precise parts, so like pistons and rings and sleeves and the internal components of like an engine. You clean them up really good. And it's a very non-abrasive way to clean parts. Whereas a media blaster is an abrasive way to remove buildup. Example is like an engine block, exhaust, transmission block, suspension, body panels and things like that. It'll remove paint, rust, carbon, just about everything. But again, it's a more abrasive way to get things off versus ultrasonic. We appreciate that. We just received a new glass handler this week. What it does is a suction glass handler. It will grab the glass and bring it up to the bus parts window to bring it up to the bus. It's a safer, more ergonomic way. And when I mean a safer, more ergonomic way, I'll paint the picture of what we used to do. 3 employees, mechanics, 2 ladders, and forklift. It's not a joke. So you take the latch, you put it on the forklift, you get the 2 mechanics off to the side with the ladders, they lift it up the area, slide it in place. So this is actually gonna attach, bring it up to the window, and safely put it up there. It's a very well needed piece of equipment. Any questions on this? And the last thing is, we have 13 new call buses coming. They will be replacing 2016s, which are our oldest ones in the fleet. Yeah, they'll be new, brand new, and everything else, and it has that new lift. I can't remember the exact name of it or the holder in the back. So what's that from?
Q-string.
Q-string, yeah.
Q-Pod, I believe it's called, Jeff.
Yeah.
No, the Q-Pod is.
No.
Isn't that?
Is it?
I know they got so many.
Oh, okay, yeah, there's so many of them.
Yeah. So, anyways, but we do have that new feature in there. We said the 2016s are out of warranty. There was a delay in ordering due to supply chain issues. The state contract going out of bid. So we finally got them on order, got them coming. February they'll be here, and once we get them in place, we'll get them on the road as soon as possible. And that's all I have. Unless you have any questions. 13. Replacing 2016.
16.
Yeah, sorry, I know it gets confusing. Thank you.
Thanks, Jeff. Bruce? Jeff.
Last and final one, right?
Oh, we got this.
Oh. Morning, everyone. 3rd week in January and no snow. So I don't like that. Our trapeze upgrade is in the home stretch. We're finishing up the user acceptance testing, addressing any remaining issues, and we're still on target for a go live in March. Northland Communications, our ISP, they continue to do equipment upgrades, which is ultimately improving redundancy and resiliency to their service. And then our final stages of our Microsoft Management Server upgrade. This upgrade is going to help us increase efficiency with system updates and enforce overall system compliance. Our webmaster's been working with service development for an extended period on the new public-facing website. It's coming along nicely, and I think you guys will be pleased with the end result. I'm looking forward to that myself. On the cybersecurity realm, topics that we discussed with the team, we gave them a threat report, giving them examples of real threats that are happening actively on our network on a daily basis. And as I mentioned previously, anyone here is more than welcome to come on down and visit us, and we'll show you what we're seeing. It's really eye-opening. We talked through the 5 steps of the incident response process. And finally, with the cyber team, we briefed the team on upcoming projects. On the horizon, what we've been looking at, our Clever system, currently it's on-prem, and it's a rack full of servers and storage and firewall switches and whatnot. We're potentially looking to moving that system from on-prem here into the cloud. The key benefit of doing this is the disaster recovery features in case of system failures or ransomware attacks. It's a costly venture, but we got to weigh the pros and cons to doing that. What's that?
In the long run, it's.
Finally, we're looking to replace the LED screens and monitors at the RTC, which are nearing end of life and will no longer be supported. This is going to require equipment and infrastructure work. With that, unless you have any questions for me, that's all I had.
What's your anticipated launch date for the new website?
That would be a question for Steve.
Website launch date?
It's still in progress. I don't know exactly how far along that Rachel and Dan are at this point, but it's probably still a few months away, I guess.
Early summer.
It's a massive project.
I know that, yeah.
There's been a lot of work done in the background on it, and what I've seen so far, it looks really nice. Any other questions?
Thanks, Bruce.
Very good.
And then I got Linda, has a few things.
Yep, I just have just wanted to share some informational items with the board this month. You see your procurement department come to monthly with procurements, and they don't do just formal contracts and bus part purchase. They also are subject to compliance like most other activities of the authority. Monthly, Caitlin and Chris King, they speak to MWBE or SDVOB utilization goals with each of their procurements. Just as a reminder, MWBE meaning Minority Women Business Enterprises, and SDVOB being Service Disabled Veterans Owned Businesses. Thank you.
A lot of acronyms.
Yes. So throughout the month of December and January, procurement has a whole host of compliance reporting due, including annual goal plans for the MWB and SDVOB programs for the upcoming fiscal year, and quarterly reports for these programs, reporting on actual utilization for the current fiscal year, as well as the annual report for the New York program that reports on the previous fiscal year. So New York State executive law mandates a utilization goal on all of our state-funded procurements. Over 25,000 threshold for both certified programs, a 30% utilization goal for MWBEs, and a 6% utilization goal for our SDVOBs. So procurement utilizes our operating and capital budgets as a basis and builds an annual goal based on the planned formal procurements and availability of applicable MWBEs and SDVOBs in the marketplace. So we have a long history of meeting our goals for the MWBE program. The SDVOB program, which is fairly new, it started in fiscal year 2017. We have been growing this utilization over the years, and it's currently now at 6.75% for third quarter of fiscal year 24. Lastly, the Green New York report includes a variety of topics, including waste generated, toxic chemicals, energy efficient equipment, and money spent on green purchasing. This is an effort completed in conjunction. Procurement is working in conjunction with our buildings and grounds and maintenance departments. So all of these reports were due in January. Caitlin and Chris King working together, Chris has been learning the procurement compliance processes. They successfully met the deadlines for January ahead of schedule. So thank you both for your hard work to continually meet these deadlines. So that's just some fun facts for you. If you have any questions about that, just let me know. So that's
Thank you, Linda. And that concludes our reports, Mr. Chairman.
Very good. Thank you for the reports, everybody. We're going to go right into Audit and Finance Committee report. We had a motion to approve the December 31st financial statements. Linda went through in detail. May I have a motion? Julius, second. Robert, any discussion? All in favor? Aye. So noted that these are all discussed in detail. Okay. Motion to approve a substance abuse policy that Jackie brought forward. Motion was made to bring it to the full board. I have a motion. Darlene, second. Luella, any discussion? All in favor? Aye. Oneida Hub liability renewal. Motion was made to renew the insurance. John Maloff brought that forward. It was a difference in price of somewhere in the neighborhood of $4,000 from the prior year. I have a motion. Monty, second. Julius, any discussion? All in favor? Aye. Resolutions. Tara brought forward the grant application for 5307 and 39. Total amount again? That Tara, total amount?
Total amount is $48.5 million.
That was off about 500. Motion was made to proceed with that. May I have a motion, please? Neil, second. Luella, any discussion? All in favor? Aye. Caitlin brought forth the Syracuse Facility Janitorial Services. Motion was made to award contract to Human Technologies. May I have a motion, please? Neil, second. Darlene, any discussion? All in favor? Aye. I'm gonna try to do this without looking at anything. See if I can do it. Utica Facility Janitorial Services, a motion was made to award contract to Human Technologies in the neighborhood of $50,000. May I have a motion, please? Darlene, second. Julius, any discussion? All in favor? Aye. Ultrasonic Parts Cleaner. Do we really need that, Jeff?
Ultrasonic cleaner, isn't it?
Go back on.
Okay, ultrasonic parts cleaner. There was a new one for me over the years. I don't think I'm not used to that one. Okay, ultrasonic parts cleaner. A motion was made to award contract to Sharper Tech for the purchase of this. $71,000. I have a motion, please. Darlene, second. Neil, any discussion? All in favor? Aye. And finally, our transit advertising services had a little bit of a robust discussion because some of them passed. But we think we have this right. It seems like we're making money right now. Motion was made to award contract to Lamar Transit Advertising for a 5-year period. May I have a motion, please? Robert, second. Monty, any discussion? All in favor? Aye. Robert.
This morning, we had a presentation from Alesco Advisors. They gave an in-depth discussion about the portfolio, the returns, as well as an in-depth discussion about the market. Mr. Chairman, that concludes my pension committee report.
Also under old business, I want to just mention that Chris and I know Tony was there, Julius was there, we attended the State of the City for Syracuse. I was very impressed with the mayor and his team. I walked out of there really motivated. I like the vision. I tell you, him and I can get along good because he works like I do, with just one speed, fast. Okay. And but anyway, Neil, please bring back those comments on behalf of the board.
Absolutely.
And Chris and I, we talked about it on the way out. Very, very impressive. A lot of good stuff happening out here.
Yeah.
And I like seeing the stuff that's in disarray get fixed. I like that. And I think one of the highlights was Tony had one of his school's band there at the beginning of the night. So I think when the kids are involved, it's always good. It's always good. It's what we're doing around here. It's what we're doing in life. Future business, we're just in the infancy stage, didn't even start, but I'll keep everybody involved on what to search, how we're gonna do this and everything, and we'll keep that going. I know that's something that'll be a lot of participation, a lot of work and effort, and so we'll keep that going, okay? And like I said, haven't really done anything yet, but we're starting to formulate the processes, work with the right personnel, and we'll get it moving. Okay. Any other comments? Julius?
One of the discussion that some of the community people was asking me is that why the Central Bus was converted from going on Midland Ave around to South Avenue. And I indicated to them that because of the new store, Price is Right, it's one of the reasons why he converted there. I think it's more convenient for the people coming in.
Yep.
So every now and then I get that comment coming from something like that.
Yep.
Julie, so are people asking, do they want to keep it that way?
No, they want to keep that way. Some of them wonder why it was converted that way. So, and I indicated it was because Price is Right, people who live in that area, they want to go to Price is Right, so the bus is convenient for them.
Any other thing for the order? I think myself and the board just want to thank all the staff for all the work you do. We really appreciate it. It's recognized through a lot of things. We'll move for adjournment. See you next month. Thank you.
Thank you.